Okay, good morning. Good morning and welcome to today's episode of the Market Snapshot. Today is the 31st of January 2024. Today is the last day of the month. I hope you're all having an amazing morning. And of course, today we have quite a bit of data. First, of course, being the ADP Non-Farm Payroll data, which we are getting at 4:30. And then, of course, the big event then for later today is hearing from the Fed chair, that is Jerome Powell. So the Federal Reserve has had their first series of meetings for the year, which kicked off yesterday. And of course, rather they kicked off, yesterday, and today they're having their final meeting, which will conclude with a conference that will be at exactly 10:30. Okay, so what the markets, of course, are expecting is that there's going to be a hold of the rates at the current level. And of course, in addition to that, I'm also expecting that we're going to get a hawkish pause, indicating that, yes, we should see some bit of risk-off sentiment from the meeting for today. And there has not really been any indication of when the timing for the rate cuts will take place, but possibly we should see them starting to take that decision, hopefully towards mid this year. Now, of course, the data that we've been getting from the Federal Reserve has been indicating that there has been some bit of cooling in the labor market. Keep in mind that one of the reasons why the Federal Reserve has been holding back on that rate cut narrative has been majorly because, rather has been looking at that rate cut narrative, and of course having a rate cut narrative was because of that indication that maybe they might need to cut rates so that they can stabilize the economy. But most of the data that we've been getting from the NFP, and of course even the recent job openings data which we got, showed a very strong increase on job openings. And of course, even then we saw that the labor market seems to be, moving in line with the expectations. And I'm expecting that, of course, we are not really seeing, that much need of them to essentially look at cutting. And of course, that's because the economy seems to be holding on quite strongly. Now, if you see the GDP that we got GDP last week, and of course, the GDP came in at 3.3%, and of course, higher than the 2.9% that the markets were forecasting. So most of the data that we've been getting has not really been showing that the US is going to have a hard landing. And of course, in that case, I'm expecting that the Federal Reserve will use that card and not really show us that there is need for them to move quickly with cutting their rates. So we just have to keep an eye and see essentially what happens there. And of course, looking at the Fed Watch tool, which is before you here, we are seeing that there's a 2.1% chance that they're going to cut back on their rates. And of course, there's a 97.9% chance that they're not going to change the rates today, which of course, I'm very sure that we should not see that indication of rate cuts. Now, again, the resurgence of inflation is another issue, which I think will be important for traders today. If they indicate to us that there's a possibility that inflation is going to resurge, we are going to see a strong pullback on the risk-on assets. So Euro USD, GBP USD, and of course, most likely gold and even the indices will have a pullback. Yesterday, we received earnings from Microsoft and Google. Google today is down about 5.7% after hours in the US session. And of course, we are seeing that also applies both for Class A and Class B shares. Now, the reason why Google is down despite the fairly strong earnings is because of their main driver for revenue, which of course in this case is their digital ads revenue. The ads revenue came in fairly lower. That was with the data that we got. And of course, this is indicating that there seems to be some bit of stagnancy on Google's main driver of revenue, which is ad revenue. So as you see the ad revenue, there was actually a decline of it from 6.588 to 6 65.5, rather not a decline, but it came in below the Wall Street estimate. So Google, of course, is the reason why Nasdaq has also dragged and is down by 6%. So we should see some fairly a strong weakness there for the indices, particularly Nasdaq. Now, of course, the other thing has been, and of course, one of the reasons why we are seeing not that much of disappointing earnings, but again, on one hand, you're seeing the stock pulling back. It has a lot to do with the market, also traders wanting to take profit on their trades. Okay, so I know a number of hedge funds have also indicated that many of the stocks are overweight. Overweight meaning that a lot of them are trading at fairly high valuations, and it might be time for a pullback there. Okay, so today, looking at the calendar, we are going to have a Federal Reserve Bank conference at 10:30 p.m. today, and that conference is going to have a lot of volatility. So around the time between 10 to 10:30 and onwards to 11:30, there's going to be a lot of volatility in the market. So in case you see, some strong movements there, do not be surprised. It might have something to do with the Federal Reserve Conference. Now, looking at the ADP, ADP is expected again to increase from 145, and of course, it's likely to increase from the forecast. It's likely to actually decrease from 164 to 125. Okay, so should we see a much higher number there for the ADP employment, we should then potentially see a strong rally for the dollar. Okay, if it comes in lower, then again we should see the dollar fairly possibly maybe then pulling back, and you should see some rally there for the risk on assets. So aside from that, that is really what has been happening in the news. Again, AMD also released earnings, and of course for AMD, I believe the revenue was expected to be much, much higher than we are seeing there today, and we should see how things play out. Awesome. So let's quickly go to the charts and see what is happening over on the charts. So for the charts, I'm going to start with the Dow Jones. So for the Dow Jones, this is currently what we are observing. Okay, we were in a range from the start of the year, and of course, we only happened to break out of that range on the 18th of January towards the 22nd, where you're seeing my arrow. And then after breaking out of that range, we got into another range, okay, which was from around the 22nd of January to around the 29th of January. So after breaking out of that range, we are now, on some kind of strong momentum move to the upside. Now, looking at Dow Jones on the 4-hour time frame, it seems like it has potential for a pullback. Now, the problem is the timing for that pullback. So the timing, again, most likely might happen possibly this week, and we should see it pulling back from those highs. The reason why the Dow has been trading substantially higher to the upside has a lot to do with the possibility of rate cuts, but also a number of companies that have been reporting earnings from the Dow have actually been reporting strong earnings, and we should potentially see how that plays out for the market. But for now, I'm expecting that we should see a nice pullback there on the Dow Jones, downwards of 38,346, where we had break of structure around this area here. So you can see that this nice break above here was a nice opportunity for us to get into a long for the Dow and take it all the way back here. Now I have my descending triangle drawn there, and I'm expecting that should we see a nice push back down to this level, then we should see the Dow breaking back to these levels here that I have marked here. Okay, so the downside momentum is quite strong there. Rather, upside momentum is very strong. But today, and especially if we get a hawkish pause from Powell, there's going to be a very, very nice pullback for the Dow, and you should potentially see it trading much, much lower. Now, keep in mind that we have two levels of ranges. So we have this first level here, and then we have the second level of range. So we should see how price plays out on those levels. Now, crossing over to NASDAQ, NASDAQ yesterday had a very nice sell trade because we saw that it again for the second time failed to break above that level of 17,600. So that level of 17,600 is a very, very nice psychological level for the NASDAQ. And every single time it has been testing that high, it has been having a pullback. So you notice that we tested it around here. And then we tried to attempt to test it. That was last week on around, I think, Wednesday. And then again, we also tried to test it yesterday. So immediately when we tested that level, we saw that there was a very strong pullback. Okay, so we've been having test pullback, we're having test pullback. We had the test and then, of course, the pullback. So it's been a no-brainer for NASDAQ there. And I'm thinking, of course, because of Google and Microsoft lagging it, I can imagine that's the reason why we saw that pullback for NASDAQ. Now, looking at it on the H1 time frame, you notice that it's stuck in a descending triangle. And I'm thinking, should we break this level here that I have marked here? It's going to be a very nice opportunity for us to get into NASDAQ and possibly ride it all the way. Now, today we have the Federal Reserve Conference. And if we get any indication from Powell that they are going to possibly reconsider the timing for the rate cuts, possibly towards the end of the first quarter, I'm thinking NASDAQ will then have a pullback and we should see it breaking below that key level of support. Okay, so for now, there is still a potential for NASDAQ to range and possibly move higher. Now, you notice that if you look at it on the H1 time frame, there is also a very strong bullish imbalance that was created from the earnings that we got for Netflix. And that imbalance, again, NASDAQ is now starting to move back and revert back below that imbalance. So there's been that inefficiency for the sell side, especially if you look at it on this side here, okay? And I'm thinking now that NASDAQ is starting to move lower, we should then have a break below this level here. This move here happened because of a Netflix earnings. When Netflix reported earnings, NASDAQ pushed higher. But I'm expecting us to have a nice push back below this level here and possibly now back below this demand zone. And then, of course, trading lower towards this area here. But for now, let's just see how it performs today. But we should be seeing some potential reversal there to the downside. Now, Euro USD, again, I've been having this descending wedge on Euro USD for quite some time. And again, it still, again, hasn't really broken above the wedge. The reason why Euro USD trended lower, that was last week, was because of the ECB. So the ECB indicated that they are going to potentially start cutting rates sometime in April, okay? So immediately when Lagarde announced those April potential rate cuts, we saw that the Euro USD had a very strong momentum sell, and even right now it's still holding on to lower levels. So you notice again that within this area here, it's having lower highs, and that is again a strong indication that there's a lot of bearish momentum. So should we get a hawkish pause from Powell, it's going to send Euro USD even lower and possibly taking it to where it was in November. Now, when you look at Euro USD on the H1 time frame, you'll also notice that the imbalance that was created on the buy side, this one right here, let's just look at it here. This one right here. So this imbalance was created from the meeting we had on 13th of December, the FOMC. So you notice that now price action is back to where it was trading. It's back to where it was trading on 13th of December. That was just last month, okay? So now this is where it's back. This was the imbalance created from Jerome Powell the last time when they had the Federal Reserve Conference. And it was a move of roughly around that was about 230 pips, and now it's back. So we should see a nice break below that level, and possibly we should see Euro USD trading downwards of 1.07233. So if the ECB does not act and take rate cuts in April, then we should see Euro USD ranging higher. Now, when you go on the H4 time frame for Euro USD, you'll also notice that it also had a very strong upside move from October, and it's now having that pull back to those levels that it pushed much higher up above. Now, you'll also see that we are on the brink of breaking below our 30. We are going to possibly break lower to our 38.2 Fibonacci level, which again, for me, is where we are most likely going to have our higher low, and of course, the potentially lowest point for the first half of this year. So we should see retest of this level and then a move higher. That's what I'm expecting for Euro USD. But for today, the play for it possibly is a sell. Now, let's cross over to gold. Now, when you look at gold, you'll notice something. Gold has been stuck in an asymmetrical triangle, okay? And we are seeing it potentially bouncing off these levels. We have seen it bounce off this level here. We've also seen it bounce off this level here. And again, we've also seen it bounce off this level here. So I'm expecting that we are going to have one more push up higher for gold, and immediately it does that, we should see it resuming its sell to the downside. Now, gold, of course, has been having war premium buys. Every single time we've been getting an announcement on an escalation of the war, gold has been pricing in that escalation with buying, okay? But every single time it buys, whenever they announce some kind of escalation, it immediately always sells, okay? Just like you've seen it performing over the past days. So now you notice that yesterday when we received the job openings or the jolt openings for the US, gold actually had a sell, okay? And right now it is holding on to these levels here, but we should see a nice flash of price action to the downside. And I'm expecting that from today's Federal Reserve conference, we're going to see gold having a nice pullback, possibly to this level down here. And again, also maybe potentially retesting this level 17th January. So keep in mind that there is still an ongoing conflict. And of course, if we get any escalation of that conflict, then we should see gold progressing and potentially breaking above this descending triangle that it has had a hard time breaking above. So you notice that it has failed to break this descending triangle. We tested it sometime, I think, in beginning of, towards the end of December, which was somewhere around here. And again, the moment we tested that level, we sold, okay? We tried it again around here, and again, we sold back down. So yesterday, job openings pushed it higher, and again, it sold. So we should see gold pull back and possibly head back to these levels down here. But for now, we can expect some potential buying to take place there for gold. Yeah, so for gold, keep an eye on the escalations. The escalations should support upside momentum. And every single time the escalations take place, we already see gold buying. If we did not need to get an escalation, then we should see it potentially selling and, of course, going back into that zone. So that is what we can expect for gold. Now, for GBP/USD, GBP/USD has been fairly range bound. And again, even today, we haven't really been, we do not really expect that much change in a price action for GBP/USD. It's been stuck in a range. And of course, we are seeing it really having a lot of choppy price action. But the key levels today to watch are going to be this level here, which again is the 7-day high for GBP/USD. And we also have to see whether there's going to be any kind of hawkishness. If we get hawkishness from Powell, then I can imagine GBP/USD will sell, and we should see a nice pullback, taking it back to these levels that it was at just around the 16th of January. So for today, we can expect a nice pullback to this level here. If that fails, then of course we should see a nice break above of that descending trend line and possibly taking us there. But for now, let's expect some bit of bullishness there. So I think that's it for our snapshot for today. If you have any questions, kindly type them in the chat. And of course, we can be able to go over them. Okay, so let me just go through the chat section, see if there are any questions. Hello, Martinez Forex Academy, Zambia. Good morning. How are you doing? I hope you're doing awesome. Mr. Vic, hi Vic, how are you doing? I hope you're doing great. Let's see. Jude, good morning, Jude. How are you doing? Morning, Joseph. Hi, Apollo. It's been a minute. How are you doing? You're asking, does Fed watch on the strength of DXY? I know it's a dual role on inflation and maximum employment. However, rate cuts will weaken the USD. Is this something Fed watches? Of course, the Fed, of course, really does not have any control whatsoever on the markets, and of course does not really have it as a mandate, just like you've stated, Apollo, that the mandate for the Fed is again ensuring that there is price stability, and of course closer to their longer term target of 2%, and of course ensuring that there's maximum employment. Now on the rate cuts, again, if what traders are going to be waiting for today is the timing. Again, we also have to see what they have to say about the data that we've been getting. So we got NFP data, which again was indicating some bit of cooling for the labor market. But now we have job openings coming in, and we are seeing that the job openings data we got came in much stronger at about 9%, okay? Rather 9 million jobs. So 9 million jobs over the course of the past month, that was for December, indicates that, again, the labor market is not cooling like we thought it would. And this should be, an indication to the Federal Reserve that maybe they could hold off the rate cuts and see how things progress. Now, yes, there is some sort of escalation of Middle East tensions, but we know that a lot of the tensions I've been seeing in the Middle East do not really indicate that there's going to be any kind of resurgence on inflation. Again, the same thing, we saw what the Fed speakers mentioned, the time when they were speaking, we had comments from Fedwala and of course from Bostic. They didn't really indicate to us that there is some kind of a potential risk on inflation, or on increasing inflation from the Middle East tension. Yeah, then again, what traders will be focusing on from Powell is the timing. So if it indicates that the rate cuts will start possibly, maybe they could consider cutting rates later, and of course to use this time to observe data and observe how the incoming data comes out, that will be seen as a hawkish pause. So we should see some rallying coming in for the dollar, and possibly then some selling in for the indices like the Dow and Nasdaq, and then of course even for GBP/USD and Euro USD. Yeah, so that's what you can expect, and we can wait to see what happens there. So Martinez, you're saying, but you said FOMC is going to cut rates, but how is it possible it's going to sell? So FOMC is not, the Federal Open Market Committee most likely is not going to take rate cuts in this current meeting. And of course, the CME Fed Watch tool is indicating that there's a 2.1% chance of a rate cut. So we are not yet too certain of when the timing for the rate cut will be, but possibly maybe closer to June, and possibly even March is likely. So we just have to keep waiting to see how things evolve. Yeah, so I think that's it, guys. I wish you all happy trading, and keep ensuring that you're monitoring the markets to see how things play out. Oh, Irene, you're asking about GPP JPY. Okay, so let's just go quickly to the MT5 and see if we can check that out. So GBP JPY has been stuck in a range, okay? And of course, the reason why we're having it closer to this level of 189 is because the Bank of Japan has not yet indicated when they're going to start potentially lifting off their rate hikes. And that's the reason why, even from the conference, we saw that the market essentially has stayed closer to that level. So I'm thinking, again, this almost looks like a descending wedge of some sort here. We should potentially see some buys here, possibly back to this level here. GBP JPY still has not indicated to us that there is still some bullish momentum there. So we should see a move higher, possibly to this level here. And if we take out this level, we are going to be going towards 2015 highs, where the GBP JPY was trading around 195, okay? So for now, I will just monitor price action there and see how it plays out. Awesome. So I think that's it, guys. Have an awesome trading day, and let's catch up next time. Cheers and happy trading.